Thank you for joining us today. Can everybody hear me? If not, if you can't hear me, type something in the chat there and we'll see if we can help you unmute. This is the Lake Point Advisory Group Lunch and Learn without sandwiches or pizza. We're continuing to do these Zoom meetings, which is great technology. It's worked out great for us because so many more people can join. Generally we do the lunch and learns in person, but not a lot of people can make it on Friday. So hopefully more folks are able to make it via Zoom meeting. It's funny, I didn't know what Zoom meeting was 3 months ago, but now it's a pretty integral part of our business and our daily lives. I'm sure it is for you guys as well. So we're trying to change up the topics a little bit and not always be market focused. We certainly want to talk about the market and what's going on, but also want to spread out a little bit. So last month, we talked about interest rates and the changing interest rate environment. This week is about farmland, ranch land. And, in some of the changes in regulations and, we have a lot of folks that have farms and ranches. Some people use it as an asset class, whether it be for agricultural income or leases and that sort of thing. So we certainly want to explore these types of topics, and I implore you guys to, if there's something that you want us to talk about in future lunch and learns, don't hesitate to call, reach out to your advisor, send an email. We love to see ideas and things you guys want to hear about. And so this one came up and I think it's going to be good. So we are joined by two experts from Hub International. Now, Hub International is the 5th largest insurance broker in the world. They have 12,000 employees, about 500 offices around the world, and they're based out of Illinois, Chicago, Illinois. And so today we've got Daniel Rutter. Daniel, I hope I didn't pronounce your last name incorrectly, and Josh Smart with us. Just to introduce them real quick, tell you a little bit about Daniel first. He is a commercial property and casualty broker with Hub. He holds commercial lines coverage specialist designation and works across several different industries. He is in the agricultural and construction, so he might have a little different view than Joshua, so we wanted to have both of them on here. Josh Smart is the Chief Sales Officer for agribusiness. That's a tough one. Agribusiness, food, and cannabis with Hub International Limited. And I think, Josh, you've been there since 2005, is that correct?
That's correct.
Okay, great. So these guys are great. We really appreciate you all being with us today. We think this is going to be a great learning experience. I do ask that you guys, for our clients that are listening, if you have questions, type them into that chat. I'll be seeing those as we go along. We've got a few questions and topics to start with, but if things come up, just type in your question and we'll see if we can get to all of them. If we don't get to your question, we'll try to send an email out and respond that way if we have too many to go over today. So let's get started. Guys, do you want to just start? Tell me a little bit about your firm, an overview of what you guys do, and then we'll kind of get a little bit narrow into the topic we're talking about today.
Josh, you want to start us?
Sure. Thank you, Carter, for the introduction. And so we are, both Daniel and I are with Hub International, different divisions of Hub International, different regions. I live in the Northwest in Washington State. Daniel's in Texas, but we are teammates in the agribusiness practice, and both Daniel and I have clients in agribusiness, farm and ranch. Most of my clients, my day-to-day clients, are dryland wheat farmers, commercial processors, fertilizer distributors. So I do a lot of crop insurance. I do a lot of commercial ag insurance, and then I lead the strategy and execution for our North America, our footprint effectively. So for Canada and U.S. And that's our job is a go-to-market strategy. How do we do it smarter, more efficiently? And if we're honest, how do we make more money at it? Not just in how we interact and how we go to market as a team, And our job and my job and what Daniel and I work together to do is to bring our resources to the client. Hub is a big company, as Carter mentioned, and it can be difficult for any one producer, any one salesperson to kind of drive all those products to the client together. So we are just as a single individual. So we do that together. We're stronger together for sure, and that's why a guy from Texas and a guy from Washington are kind of working on deals together. And he's much smarter than me, and so I just kind of tag along and hope to learn something.
Yeah, hey, Josh, thanks for joining. As Josh alluded to, I'm here in the Dallas office. So my agriculture clientele are more on the co-packing side, food distribution. Here locally in Dallas, we do have an entire kind of farm and ranch group that runs out of our private client section as well. And in full disclosure, I did tap them as well. It's one of the benefits of the resources that we have at Hub is be able to pull in specialists kind of across the board. And so some of this presentation comes directly from them, and I want to give them credit where credit's due. So Josh, thank you for joining the call. As Josh mentioned, he's one of our practice leaders. So some of this will be very specific to some things that he has. Great.
Well, thank you again for joining us, guys. So, the invitations we sent out had a few different topics, so I'm just going to start there. And I want this to be conversational, so you guys just kind of roll with it. I'll prompt you, and then we'll see where it leads us. But using crop insurance as a hedge, PRF. What is PRF coverage? What does that mean? How is that changing in the environment today? And what can you guys enlighten our clients about in that regard?
Sure. So crop insurance, as I mentioned, is one of the main things that I sell day in and day out. And we have seen in the last 4 or 5 years a product called pasture rangeland forage, PRF, come about. And effectively, it is a rainfall program. It can cover rangeland, it can cover grazing land, and it can do both or one or the other. And we've got clients that have both on a ranch together, which make perfect sense. So what we're doing is we're taking an average of the last 20 years, and NOAA, the National Oceanic Association administration, they pull all that data together, and they give us a grid, a 17 by 12 mile grid for every grid plot in the country of average rainfall per month. And we can insure to that rainfall amount up to 150% of the rainfall average. So what it turns into in some areas, that's the technical kind of overview, but what it turns into for the client and for the farmer rancher is if you don't get the rainfall that you normally do, or you get it in different months, it's an early rain or a late rain, we can insure for the period of time that you need that grazing land or that haying ground to be raising the crop or raising the range, the grasses and the natural grasses there, so that you can graze your cattle, graze your livestock, cut your hay, your timothy, your native grasses. All of that can be done. Those are all specific time frames, but you may not get the rain to do that if you're in non-irrigated ground. So this is a product that allows us to basically insure against rain for clients that are in that position. And what we're seeing in the Northwest and around the country specifically is that it's a profitable put for clients, because they can, for a couple of dollars an acre, they can insure effectively that they're going to have to not buy extra hay, or they're going to have the yield that they're going to get. And whatever you don't yield naturally, you're getting the crop insurance backstop to pick up the difference financially, so you don't have to go out and get more grazing land, more pasture ground, more winter pasture or summer pasture. You don't have to buy more hay to backfill. It allows for that rancher operator to have the cash flow they might not have because they've already put their hedge out on rainfall effectively.
So what would define what are the parameters when you think, okay, we've got X number of acres? I mean, it covers, from what you said, so it covers agriculture and livestock too? How would somebody go about knowing how much insurance they need?
Yeah, that's a good question. So we've seen operations large and small. We've seen 50-acre operations. We've seen 5,000-acre operations and 25,000-acre operations. Spread of risk is always part of an insurance calculation. It's a soft calculation. Are you spread out? Are you narrowly confined? So you might have 15,000 acres that are all in one contiguous land mass. So that's not a spread of risk. But you might have 10 locations that make up 15,000 acres that are spread all over. That's a better spread of risk. So it's dependent on the client and what they need and what their outlay looks like. But there is no small client, and it works for all large clients. And it is rainfall specific in this case. Livestock, for pure livestock purposes, is covered under a separate program for the animal themselves, for the value of the animal. That can be also purchased through a separate crop insurance program, but for PRF, it's pure rainfall to a land mass.
So have you seen rates as far as cost for Texas? Is it more expensive than other parts of the country, or less, or just depends on the year?
It depends on the grid. So it's that 17 by 12 mile grid breakdown. It can be anywhere from $4 an acre for grazing ground up to $25-30 an acre if we're talking about haying ground. So the cost per acre can vary depending on what we're trying to do with the ground, what it's being used for, but also there are percentages of that rainfall that you can buy, and without getting too far into the weeds, it can be inexpensive from the standpoint of a pretty low cost hedge, or it could be fairly expensive from the standpoint of $25-30 an acre, and that is an annual cost, not necessarily a monthly cost. So it would be an annual cost per acre depending on how you buy that and what your ranch looks like.
Would they have to grow a particular type of grass, for example, for hay, for grazing? Is it no? Okay.
No, any type. Yeah, and it's any type of. It's also any type of grazing ground. So it's not specific to livestock. It could be sheep. It could be a lot of different kinds of animals: bison, buffalo.
Okay, great. Now, Daniel, what are some of the differences between an insurance policy for a ranch and just a personal homeowner's policy or personal insurance policy, would you say?
Yeah, so one of the key starting pieces to this is, are you generating income? So anything over $25,000 in income needs to go on a farm and ranch policy. Your homeowners is not going to pick up that exposure once you're generating income. So that's a kind of a key question to start with. Outside of that, I'm sorry.
Oh, income is kind of the first question to find. Okay.
Yeah, and then outside of that, just some of the differences are what's going to be covered. So a farm and ranch is going to be a scheduled policy, and so that's fancy talk for saying anything it's going to cover has to be disclosed in the policy, and so that's a key thing to keep in mind. Where your homeowner's policy will pick up things that maybe you acquire over time that aren't necessarily disclosed or scheduled. Your farm and ranch is going to operate a little differently than that. The liability, especially here in Texas, the liability works a little different. So just kind of give you a real life example. Current client had a cow that got out, livestock got out from the field, and car actually hit that cow.
Wow.
They then tried to get the landowner to pay for the damage to the automobile. In Texas, on a farm and ranch policy, there has to be negligence. So did you leave the gate open? Was the fence in disrepair and allowed the animal to get out? In this instance, that wasn't the case. And so they were not required to pay that. So liability works a little differently. Kind of the short answer is yes, there are definitely differences If you have questions, it's a very nuanced coverage. So, work with your broker or find a broker that can answer your specific questions and really address your risk specifically.
Okay, great. Now let's get into, part of the nuance of that policy I would think would be pollution. Pollution to groundwater, pollution using different fertilizers, and is that something that needs to be included in these policies?
Yeah, so your pollution is, the insurance nerd to me says that the pollution is one of the more interesting things that's going on right now. So pollution is excluded on your general liability policy, 98% of the time. There are not very many policies that pick it up. If it is addressed, it's done through either a supplemental coverage with a sub-limit or some kind of endorsement. There's a lot of movement right now that is addressing this. So I think as a society, we're becoming more green, if you will. And there's been a number of court cases that have come up in the last several years that are addressing, manure as a solid waste, which is a clear exclusion on your policy. Part per million contaminants in groundwater and things like that. And so it's being played out in the court system right now, and the pollution cases are increasing significantly.
So is it more on a state level? Is this a federal, when the court cases go, is it federal or is it state specific?
Yeah, so right now, it's not a federal issue. It's all handled at a state level. However, there is some legislation that's in the court system right now that could change that. And it could potentially put farms and agribusinesses in a position to have to get a national pollution discharge elimination system permit. So, as I said, things are evolving and changing, and it's an interesting thing what all falls under pollution. And when you start thinking about that being excluded, it can get kind of daunting.
Is it mainly what they're trying to prevent is pollution to groundwater, or is it air and groundwater, or both?
So the definition of pollution is quite broad. And so, it goes as far as, smells. So there's instances of dairy farms where the neighbors are saying, hey, it smells too bad. And that is being viewed as a pollutant. And so how do you address that? How do you remedy it? And how do you pay defense costs and so on and so forth? So, it is not just groundwater. It goes into other things like transportation. So if you're hauling anything, and even storage of chemicals, if you've got Roundup or, certain fertilizers and chemicals that may be toxic, those can also come into play.
So what kind of liability would somebody that didn't have pollution coverage, supplemental coverage, what would be their liability if it did leak into the groundwater of a local reservoir or river? I mean, I can imagine that would be a huge cost to clean up.
So every case is going to be different. I certainly wouldn't want to try to put a dollar amount on there, but I can tell you that from 2015 to 2018, we saw a really significant increase in kind of the average claim size and also the volume. So there were 50% more pollution claims than there were general liability claims during that time. So, it's an interesting thing that's going on around that topic right now.
So depending on what you're doing with your land, you might have to have a supplemental coverage for fuel that you store, fertilizers, I would think pesticides.
Yeah.
Right?
Yes. All of that. I know underground storage used to be a big thing. My grandpa was a farmer and he had gasoline pumps at his house.
Oh, wow.
He lived, pretty rural area. And so, yeah, he just had a pump right there by the garage. And so, the number of underground storage tanks that are out there might be shocking. Some on the call probably have some on their property. So addressing that coverage is really important. Josh, you have anything to add to any of that?
I would just say on a farm, from what I see on farm policies, kind of straight line farm and ranch policies, you're right, we can get some pollution coverage. I think the key is that I've seen is really groundwater, surface water, and the EPA. They've been very cooperative, at least in my part of the country, when it comes to working with farm and ranchers that are moving, whether it's liquid or it's pellet, fertilizer, pesticide, chemical application, and the times when it has potentially been in a waterway or near a waterway, they've really worked with the operator to get it remedied. So while there is a significant pollution exposure and different types of farm and ranch operations have different exposures, dairies are a different exposure than a ranch, a true ranch or a farm. We are seeing at least some cooperation from the government and from the EPA on that, which is nice. So if you're a commercial venture, the rules are different, but for a farm and ranch, I feel like there's still a little bit of cooperation involved, which is a helpful component.
Are you seeing more regulation, less regulation? Is it, as a whole, are you seeing the government step in and produce more types of things that people are having to account for, or is it getting a little bit looser?
Yeah, I wouldn't say it's getting looser. I would say that there's bigger fish to fry at the moment, and it's not a priority for this administration to really pinch this particular type of federal programming. So we are seeing, any time that it gets out for litigation like this glyphosate Roundup situation, it gets a lot of press, and it puts a stain on that type of application. So we do see ebbs and flows and how much a certain type of chemical is used, and we do get some media kind of firestorm around things like Roundup, but I would say that the EPA is one of the, at least from what I've seen, and is one of the few government entities that is still trying to operate with some level of sanity. They are going to come after, they're going to work with OSHA, and they're going to come after commercial ventures far more significantly. So if you're, a pulp manufacturer and you let your containment ponds get into the river without it being fully cleaned out, like that's going to be a huge problem. So it's really a matter of what we're talking about. But if it's just a farm, ranch, dairy, and you're doing the right things, you're following the protocols, you're probably going to be fine more times than not. But if it's going to get into a public disaster, then like anything right now, it's going to get away from you. And OSHA is going to come down hard, and the EPA is going to come down hard, and everyone's going to be up in arms. But for the most part, out on the farm, out on the ranch, I would say that it's not been a big deal.
So what are we going to do if Roundup's taken off the market? I mean, I got weeds. I mean, what is there threat of Roundup being taken off the market? They took my MSMA that I used to use for my grass weeds. That's gone. Without Roundup, does that mean I'm going to have to go out and pull weeds? That's my biggest fear.
Yeah, that's it. That's fair. I mean, tongue in cheek, of course, but yeah. I think that I think we just have to do some research as a people in the ag industry, and all of us on the call have some connection to it, or you might not have participated today. But the ag industry, by and large, is a common sense industry. So when you meet a farmer rancher, everyone just wants to do the common sense thing, and Roundup is not something to be feared from the standpoint of a lot of the other things that are used on the farm. But just understanding how it's used and why it's used and what purpose it's used, from an agriculture standpoint, from how it's used in the Northwest, it's used to dry a non-determinate bean, a garbanzo bean. You got to kill it with something. So we've been using it to spray down and kill the plant so that it can be harvested dry instead of harvested green. And at the point at which it's sprayed down, it doesn't really get into the bean, but that's neither here nor there. The point is that if we don't use Roundup, we're going to use something else.
Yeah.
And if we're using something else, it's something that hasn't been tested and vetted to the extent that Roundup has. So I think it's just, you know, is it going to be used agriculturally as much as it's been used? No, because it's considered a GMO product. And so if you're a non-GMO purchaser, then you're going to require that farmer spray something else. But is that something else they're going to spray better? Who knows?
Who knows?
May not be long term.
So I've seen that, you know, this terminology in the insurance world, the market is hardening. What's going on? You know, what are you guys seeing trend wise about getting insurance? More expensive, harder to get, harder to qualify? What do you guys see?
Yeah, no, great question. The market in terms of certain lines, your auto lines, your property lines, really any kind of excess and umbrella, at least on the commercial side, is really tightening. And Josh, thanks for clearing some of that up, because my focus is really on the commercial side. So my clients will typically be that larger scale that really is more exposed to the litigation side and you know, more at risk for that. And within the commercial real estate market, I can tell you for sure that property is really hard to place right now. Excess is really hard to place, and just overall, you know, we were already seeing upticks in premiums, tighter restrictions on underwriting, limited capacity, and then coronavirus came. So that's certainly not helped anything. And it's kind of a mess right now, honestly. Josh, what are you finding?
Yeah, we run the gamut on operations. I would say that the thing that you know, folks like Carter are going to advise is, you know, to buy enough protection for yourself so that if something goes sideways behind the wheel of a vehicle or behind a tractor or with land you own, and you get pulled into a claim, you know, we want to have enough liability protection to protect your assets. Is one of the ways that I answer the question of how much umbrella insurance, for instance, does a person buy. And you know, if a client has, you know, say north of 10 million of assets to lose, they might want to look at a $10 million umbrella as an example. That doesn't have to be that way, but that's one way it might be answered. And I would see, as much as Daniel just said, I think that getting those higher limit excess policies, whether it's farm or personal, is starting to cost more. And in some ways, it's becoming harder to get. I've got an affluent client that's trying to get 20 million of umbrella coverage because they have some assets to protect. And the farm program we're trying to place, the highest they'll go is they'll go to 5. And then after 5 million, I've got to go to excess markets, secondary markets, to get that remaining 15 million. So when you start going out to more markets to try to find more coverage, the price per million does go up a bit, and that's in line with what Daniel's seeing. But as an industry, in the ag industry, we are also seeing the auto premiums going up, and we're seeing some property premiums kind of creeping up. Although I would say the ag division, the straight farm and ranch side of agribusiness, has not seen the property increases to the level that the real estate market and some of the other commercial markets are seeing. But we are up, I would say 6 to 8%, you know, from last year. But I think real estate and commercial markets are probably north of 10% in some cases. So we're in line, but we're not right in line.
So what about folks that use the land as an income for like hunting leases and that sort of thing? Is that difficult to cover?
It's not difficult to cover, but it is different to cover. So, you know, your liability when you are inviting friends out is different than your liability when you have a lease set up on the property. And that's a key thing to keep in mind. If you don't have a policy specifically for that exposure that is, you know, generating income, then you really want to consider taking a look at that.
Okay. it's a new world we're living in. You mentioned coronavirus, and one thing I've seen is people are business owners. For our business owners on the call here, but business owners are looking at PPP insurance. Can you kind of tell me what that's about and what are the risks they're trying to cover?
Yeah, so we just rolled out a program through Hub. The PPP it was rolled out really quick, and the rules seem to be changing, and so there's a lot of uncertainty in that. And so if you took the PPP loan under 2 million, there's not a lot of scrutiny. If your business took over 2 million, they are now really focused on that group. In fact, there is a kind of a published list of all the companies that took over 2 million that's out there and available now. And the government's put a 6-year audit period on it. Wow. And so you can actually buy insurance for that loan in the event that it turns out that the rules weren't clear enough, and not through fraud or dishonesty or deception, but just out of filing it and not knowing the criteria exactly. If they come back and claw back that money, you can insure against that.
Wow, 6-year look back. That's incredible.
Yeah.
Okay, that's good to know. When we're talking about insurance, what should folks be doing? When do they, what's kind of the process? When do they need to start looking at insurance? How long does it take to put things in place? I mean, what's the timeline of it? What are some of those questions or answers to those questions?
I'll start. I would think that 90 days is not an unrealistic expectation, just to make sure that we've got enough time to gather information. And depending on the complication, if we need to do any work comp alongside that ranching or farm operation or commercial operation, it's really helpful. I don't know that it needs all 90 days. But the more time we get access into the market, the more time we can sit down with clients and really explore their options, help them understand what's on the table for a proposal, and make a decision, before the renewal. 30 days or more before the renewal is so helpful most of the time for our clients, and that's what I typically try to work through as a 90-day out period. Occasionally we get pinched in time, but if we can get 90 days, that's our preferred time frame.
Daniel, same for you in your line of business?
Yeah, so on the farm and ranch side, like Josh alluded to earlier, it hasn't hardened to the degree that the commercial side has. If you're here in North Texas and you own commercial property, whether it's multifamily setups or just industrial space, anything like that, the market is quite volatile. So the more time, the better. And getting into, kind of a time frame, 90 days is kind of a must-have in this market if you're going to do it real effectively. I will tell you, underwriters are not really helping us right now. So a lot of underwriters are holding on to their terms and not releasing things until really late. And so if you've got a renewal that's coming up, don't expect to see anything. You would normally get everything, maybe 45 days prior to expiration. They're going to hold it and release it a whole lot closer to terms. And, if you're concerned about what is happening in the insurance market, getting started early is going to be really beneficial, because you may not know what your renewal looks like until it's a really tight time frame.
Wow. We have a lot of clients that have rental properties, residential property, that they rent as an income source. Would be kind of the same. Would you say the same for those folks that have a portfolio of rental properties?
Yeah, that market's really tough right now. I've seen a number of carriers that have left the market here in North Texas. So that wind hail consideration is really driving that. So if you have any frame structures that you're insuring, like I said, especially if it's multifamily, that market is something that you need to get into early so you can explore all the options.
Are you seeing rates go up?
Yeah, I mean, to Josh's point earlier, a 15 to 20% increase is not unheard of. One of the things I'm seeing a lot right now is moving that wind hail deductible. Historically, we might have a flat wind hail, so a 25 or 50,000, depending on total value of the building. Now we're pretty much moving to percentage based, and a 2 or 3% wind hail is pretty typical in the business right now.
Gotcha. Well, that's great, guys. That's kind of all I had. I'd like to go to some client questions, if that's all right with you.
Yeah, absolutely.
All right. Let's. Okay, first one. How do I determine fair market value for grazing lease on 200 acres of improved pasture land in East Texas?
Josh, you want to tackle that one?
Yeah, whichever one you think is good. Yeah, somebody jump up and grab it.
I'm not in Texas, so I would say that in the Northwest where I'm at, so I can't speak to Texas specifically. I think that that leases are often, it's market. You got to go out and talk to your neighbors a bit. You can check and see what kind of costs are being turned around for land sales. That might be one way to go about it. There are a number of law firms that specialize in ag, and so they see leases all day, every day. They help write them, they help put them together. So another resource could be finding a law firm to reach out to that specializes in land lease agreements and have a large portfolio of clients in that East Texas area. Would be my two ways. So boots on the ground information is number one, and two might be reach out to a law firm that specializes in ag and land leases.
Okay, great. Yeah, good. All right, here's another one. Can you elaborate on the liability insurance difference if you are inviting friends only at no cost versus an income producing lease? It seems like my liability would be the same, or is it that a friend would presume no safety when they came to the hunt for free?
Really, it comes down to the income. So, when you do a lease, now you're making income off of it, and your standard general liability policy is going to exclude things that generate income. Is kind of a short version of that. So if you're making money off of it, it's just viewed differently by the insurance company than if you've just got some friends that are coming out and an accident happens.
Okay. All right, good to know. Let's jump to another one here. Okay. Okay, we're in Utah. We have insurance, but it doesn't cover earthquakes. We were wondering about the umbrella policy to cover this. We have a number of rental houses and duplexes. We don't have agricultural properties.
So that earthquake coverage is, it's kind of specific to a region. It's similar to like a flood coverage. So I'm actually, my home is here in Irving, Texas. And as you may be aware, if you're from North Texas, we had a series of earthquakes a couple years ago, and they were all, originating right here around where I live. And I was not able to find quake insurance. So that's one that honestly just have to get the schedule of properties and go to the market and see what's available for that coverage. The umbrella coverage, it's going to depend up to the carrier on the umbrella if they will sit over the underlying or not. Josh, do you place any quake insurance over there on the coast?
We do, and we have a number of companies that do so. Carter, is that a residential? The question in Utah, are those residential properties or commercial properties? Was it specific?
It looked like it's residential.
Okay, so yeah, if they're single family homes, that could be a little different than if they're multifamily residential, but it would probably be something we would place with a carrier, a secondary market, either through an earthquake policy or what's called a difference in conditions policy, where we can get, oh, great. So yeah, we can work through those situations on quake, most likely. I don't, but you know, we got to get into the local market and pull the earthquake zones and go that route. But it's probably not something that's going to be covered on the umbrella. That's typically a liability exposure. So it would be a property policy through an earthquake policy, and it's certainly something we can pull together, Daniel or myself.
Great. And if anybody on the call, client-wise, wants information from these guys as far as their contact information, just send an email or call your advisor, and we'll get that to you. Now, one last question, and we might have kind of gone over this, but I want to make sure we get the question asked. How does Texas agritourism affect my hunting lease insurance? Does this lower my liability? Daniel, you want to grab that
Can you
one?
say that one more time?
How does Texas agritourism affect my hunting lease insurance? Does it lower my liability? So I'm assuming like a VRBO kind of thing, or you know, that maybe along those lines. Agritourism.
Yeah, I'm not exactly sure what the situation is there. If it's to your indication, you know, maybe a rental situation. I don't know that that's going to lower your liability at all. Obviously, you have that ability to do risk transfer through the lease agreement or the rental agreement. But yeah, if it's a hunting lease, like I said, there are specific policies for hunting lease policies. Essentially, you just want to make sure you've got that. Don't lean on just your standard general liability policy. You want a policy that is specific to that exposure. Because if you look at your standard GL policy, it's not going to pick that up, most likely.
And it looks like it is a hunting lease. So, okay. How much does taking a higher deductible help to lower premium?
Yeah, both of us kind of have the same look on our face. Josh, I'll let you speak to it.
Yeah, I would say that it's not as much as you would think it should be, would be my reaction. So if we have a lot of properties, we have a lot of equipment, and we've got a lot of overall property we're insuring, taking a higher deductible can offset some premium, but it's not, a $2,500 or $5,000 or $10,000 deductible, in my experience, has not significantly reduced the premium, unless we have a big operation on our hands where the premiums themselves are 70, 80, 90,000 all in. In those cases where the property part of that package is 25, 30,000 in premium, in that situation maybe we would see a substantial enough difference, but I would say it's not enough to really offset much cost.
Okay, yeah, great to know. All right, last question. I have a hunting club where we pitch in $200, a $200 fee to cover costs. All members sign a waiver of liability. What kind of insurance do I need?
Yeah, really good question. I think part of it's going to come down to who retains the money. Does it go to an LLC, or is it retained by an individual? That's going to be a key part to that. It's an interesting one, and I'd be happy to dive into more specifics there. Keep in mind that threshold of money. I mean, if it's just $200 and there's 10 guys, I don't know that you need a farm and ranch policy per se. Like, I would really explore the language of your current policy, because every carrier has to address the hunting exposure, and just make sure that you don't have an exclusion there.
Okay. yeah, once again, to expand on it any more than that, if you guys want to shoot an email over to us, we'll try to dive a little bit deeper in. I'll just put you in direct contact with Daniel and look into it a little bit further on your particular situation. But all great questions, guys, and great information. We really appreciate Daniel and Josh joining us today. We try to make these as educational as we can and interesting, and hopefully you got something out of it today. Just to remind you that, we'd love to hear feedback, topics that you want us to discuss and go over. So please shoot emails or call in. Let us know what you guys would love to learn about. And so any closing comments, Daniel or Josh, before we kind of wrap it up?
Carter, just want to thank you and the Lake Point group for giving us the opportunity. Like I said, we would love to hear some feedback and deep dive into any additional questions that come up. So let us know how we can help.
Same for me. Really appreciate everybody joining the call. And if there's a way we can be a resource, please let us know. We'd happily be that for you.
That's great. Education is key. Things are changing our world is changing daily. And so I think education is, very important, and use us and use these guys as a resource for anything that we can do to help. So once again, thanks for everybody for joining us. Have a great weekend. Be safe out there, and we'll look forward to speaking with you soon.